You're likely not thinking of this, but over the past couple of years, as things have evolved in the economy, you might now need more life insurance. You might, okay? How? Why? What are the reasons? I'll explain that more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. With all of the changes that have happened in the economy over the past 3 years, likely you're not thinking about life insurance. Really, there's been so much change with tax laws, in the economy, with the stock market, with cash flow and inflation. Likely you're thinking, well, geez, let's leave well enough alone. And life insurance, I had it in place, I'm just a couple of years older, no big changes, right? Maybe not. This is a time right now that you've got to review your overall life insurance and whether your needs have changed. I'm using that word specifically because when you're looking at how much life insurance you need, there's the kind of the shortcut way, which I completely disagree with, or where there's the planful way to see how much life insurance you need. Dave Ramsey and some others say you need a multiple of income. I completely disagree with that. Why? Because that would suggest you need the least amount of life insurance early in your career and the most amount of life insurance later in your career. That is illogical. That does not make sense. When you're young and don't make a lot of money, that's when you likely have young kids, a big mortgage, very little saved up for retirement. So you actually have a bigger need for life insurance than when you're later in your career. So to us, instead of that multiple of income approach, which makes no sense, you should be using a needs analysis approach. That's how you determine what type of insurance you need, life insurance, and how much life insurance you need. So typically just a role play, and this is a financial planning process that you're going to do with your certified financial planner, and you're going to think through, well, if something happens to you or your spouse at this point, how much life insurance would be needed to help make sure that your goals are funded. And what are those goals? Well, a certain amount of lifestyle. Our living expenses are X, and if there's, if you pass away, a lot of those living expenses will still be there. Yeah, we might not spend as much at the grocery store, but we'll still spend something. Our property taxes will still be the same. Homeowners insurance will still be the same. So you're still going to have lifestyle choices, okay? And your lifestyle, there are certain goals with that. Then you might have a goal of paying off your mortgage. You might have a goal of even moving houses, something like that. You might have a goal of helping the kids with college, and you might have a goal of hopefully retiring someday. And without the income that spouse was bringing in because they passed away, are you going to be able to aggressively pay down the mortgage, aggressively save up for college, and save up for retirement? Possibly not. That's where that needs analysis comes through and says, well, if so-and-so passes away and their income is gone, would you have Social Security income that comes in? Would you go out and get a job? If so, how much would you earn? Blah, blah, blah. And you can actually do the math to say, here's how much life insurance you would need, or you're actually self-insured, you don't need insurance. Now, through that approach, if you take a look at it now, it's different than it was even a couple of years ago, and most likely you may need more life insurance right now than you previously had. Why? Let's break it down. There's three main reasons. One, he's going through that needs analysis approach. If you're first looking at how much income would you need to replace your lifestyle, to cover your lifestyle, well, due to inflation, lifestyle is likely more expensive today than what you projected the last time you looked at your life insurance. It's gotten more expensive to live. In addition, that lifestyle is often tied to, well, how much are you earning? And most people have seen significant raises in how much they're earning over the past couple of years. So not only has your lifestyle, the normal lifestyle, increased because of inflation, your lifestyle may have increased anyway simply because you now have more income at your disposal. So looking back, maybe when you did your needs analysis to determine how much life insurance you need, it's possible you were looking at, well, I could probably live on this amount if something happened to my spouse. And today it might be, well, we'd probably live on this amount if something happened to my spouse. That would influence how much life insurance you need. The second reason why the need for your life insurance may have increased is you may have moved. You may have moved, and we all know what's happened to house prices, okay? If you now have a bigger mortgage because the house was more expensive when you moved, or you've got a higher mortgage payment because now the interest rate is higher than what you have, likely, again, that's one of the needs analysis. That's one of the goals that you're going to look at for determining how much insurance you need is, well, would we be paying off the mortgage, and therefore the amount of your mortgage or the interest rate is going to influence how much life insurance you need. Another reason why it might, connected to the house, is so oftentimes when we're talking through this needs analysis approach, people say, well, if something happened to my spouse, if my spouse passed away, I wouldn't want this house. I wouldn't need, there'd be too many memories. It's too big. It would be too hard to keep this house. Therefore, I'd want to make sure that I've got liquidity so that I could sell this house and buy a different house that I could, that wouldn't be so emotionally tied to where, to the life that we had together. And I get that. But houses are more expensive now. And therefore, even if you haven't moved, if that applies to you, that might be a reason why you now need more life insurance than you otherwise did. And then finally, I talked about that needs analysis approach being, your lifestyle, but then paying off debt or paying off mortgage, but then also funding some unfunded goals. College, retirement being the majority of them, or being the primary ones. Those goals have likely gotten more expensive to fund. Why? Because college expenses have gone up and cost of living, so room and board has gone up as well as retirement. You're likely in retirement, you're going to spend more than you thought you would need a couple years ago because of inflation, and your health insurance might be more. And combine that with investments and the market being down, you may take a look today at your overall needs analysis and we actually need a little bit more life insurance because if something happened to one of you, we'd need more liquidity there to fund or pre-fund college or retirement or some of your other big financial goals. So have you looked at your life insurance lately? Have you looked at your life insurance need lately? Not a fun topic to discuss, but something that your certified financial planner doing comprehensive financial planning, this is their job to review these things and make sure that you've got adequate coverage. So work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us there as well, or send us an email, info@Korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.